So in today's video, I am going to break down a couple of pairs, but I think I'll do that on separate videos. But for today, I'll be breaking down gold, I'll be breaking down Bitcoin, I'll be breaking down US30, and I'll also be doing the DXY. So when you are able to identify the direction and bias of the DXY, you can definitely predict 3 other pairs. So I'll show you in a few videos, but I don't think I'll show you in this video because I don't want to make each video too long. So today we will just be doing a top-down analysis on Bitcoin. Because I did do videos on this pair before, and I did say that we are heading towards this high up here on a 3-monthly chart, as well as on the weekly and monthly chart as well. So all of this that I've said has played out. It's a matter of fact that we are retracing now inside of this 3-monthly. So once we swept liquidity and we've pushed to create all-time highs, we will then retrace inside of this 3-monthly candle so that we can see that we have swept this dynamic trend line of liquidity, and then now we are rebalancing into a area of interest that was created in this expansion of price. So what I'm saying is that price does 2 things. Price sweeps liquidity, and then it targets inefficient price. It targets inefficiencies in the form of fair value gaps to rebalance itself, and also to take out more orders and liquidity as well. So a fair value gap or imbalance is some form of liquidity as well. So now that we know that, we will definitely just mark out that we swept this. I was going to draw a diagonal, but I feel like we can just use a straight line because these are relatively equal highs, and static liquidity is a magnified price to go to. So static liquidity is equal highs and equal lows. I'll just put it here as a liquidity graph. And what we've noticed in the past as well, so what I want to do is take you back to the past as well, so that you guys can get an understanding. So what you see in front of you is price action sweeping liquidity and then rebalancing inside of fair value gap. So this is a 3-month BTC. So I'll just show you what price does on the 3-monthly chart before we actually go to a lower time frame, where we can see price do a lot more than just rebalance into imbalances. So it's a 3-monthly BTC. So this is a 3-monthly BTC. And as you can see, what we've been doing is taking liquidity and then rebalancing inside of these fair value gaps, and then seeking even more liquidity. So this is what I'm going to do for now. I'm just going to show you what price has been doing according to when it pulls back. So what price does, it takes liquidity and then it rebalances, then it takes liquidity and then rebalances. So it's a thing that you will have to find on whichever pair you're trading for or trading on, or whichever asset you're using to make money off of. You need to definitely find out what works on that pair. So as you can see, based on the 3-monthly pair, is that we have swept liquidity. And as you can see, we've taken this high right here, so I can actually just mark it out just to give you a reference of what we are looking for. So as you can see, price has swept that liquidity, that high, and then we rebalanced inside of this 3-monthly gap, and then we swept that high and then rebalanced, and then we swept this high with this big expansion, and then we rebalanced, and then we swept this high. So somewhere inside of this 3-monthly candle now is an area where we're going to find price to rebalance and then push higher. So as you can see, there are 9 days exactly till this candle closes. So when this candle closes, if this candle closes above the close of this candle, which is this area, this right here, this body right here, that means we will have a valid order block. And what I'll be waiting for is for price to then come back and retest the body and then push higher, since we have created this order block, which is basically an order block right now where price is currently. But if price closes up here or closes anywhere above the open of this price, then we have an engulfing and we are looking to retest this candle and push higher. So let's move down to a lower time frame. Let's move to the monthly time frame. And as you can see on the monthly time frame, you can see structure a bit clear. We've got this high, we've got this low, we've got this high, we've got this low, we've got this high, we've got this low, and we've got this high. So when we created this high, we also created a new trading range. So if you, so now move this to the side. So as you can see, our previous trading range was this swing low right here and this swing high up here. So when we place our Fibonacci or Fibs or Fibby over this trading range that we've created, you will see that we definitely also retraced inside of this range, which is made out of the swing high and swing low. And inside of that range, we found an area of interest, which is this 1 monthly BTC or this 3 monthly BTC as well, to then look for an area to take us higher. So what you as a trader was supposed to do, and this is what I teach, is that you look for a current trading range, which needs to be a valid trading range. So a valid trading range is made out of a swing high and a swing low. So your swing high is made out of 3 candlesticks, where the middle candle, which is this bullish candle, is the longest candle between the 2 candles adjacent to it. So the 2 candles adjacent to it, which would be this shooting star candlestick right here, or this bearish candlestick, as well as this engulfing candle right here. So this is my valid swing high, and this is my valid swing low. With this bearish candle, you can call it a hammer candle, because the shadow is at least 2 times larger than the body. So this is general information that you can go and look at. And as you can see, this is a swing low with the longest candle, and it is longer than the 2 adjacent candles. So this is our valid swing low. And when we have these valid swings in place, you wanna then to get your Fibonacci, place it off your range. And as you can see, we had a valid pullback. So what a valid pullback is when price pulls back into a a discount level or a premium level. So in this case, for buys, we have pulled into our discount level. Our discount level is 50% and below, and that is where high probable setups take place. That is where you will find the highest probable setup. So the reason why I'm not marking out this 1 monthly BTC is because we already have a 3 monthly BTC right here that we have reacted out of. So you will have to find a change of character on a lower time frame somewhere here, where we have created this week right here. So somewhere inside of here there was a lower time frame mark structure shift or a change of character that we will definitely look at, so that we can see why price has pushed higher and how we can get into this move, because we are bullish, trading bullish structure. So let's just, okay, I'll leave this here. So we'll be going to a lower time frame just to identify where we are currently and where we're going and what we want to do next. So what you are seeing right now is that we've created a higher high. So the next thing is that we are going to wait for a valid trading range. So this is my higher high, because we have this is going to be my higher high, and this down here is going to be my higher low or swing low. This is definitely going to be my swing low, because this candle and this candle is shorter than this candle. So what I'm expecting the next candle to form is either that we will take previous monthly high and then come down to create another pullback, because we are waiting for price to create a valid swing high so that we can get in on the retracement. So for instance, if the price closes like here, then we have these 3 candles, and then what you can actually do is place your Fibonacci over this range again, and then you mark out your discount level, which is 50% and below, and then you wait for price to then pull into your discount level, and then you wait for a lower time frame change of character. That is what we're going to be looking at inside of here. So we know we're bullish on the weekly, we know we're bullish on the 3 monthly chart, the monthly chart. So now we will be popping down the weekly. So as you can see, in the weekly we have a bit more candles. So for me it's a lot easier to look at time frames where everything is not really a mess or everywhere, but I can make out that we have a swing high and a swing low and a swing high and a swing low and another swing high. So what you will notice is that I'm expecting price to at least retrace inside of this range. So what I am looking at is we have balanced inside of here. So we have pushed inside of here and then we moved higher, but now it looks like price wants to push even lower. So what I will do is mark out this fair value gap as well, because there's a potential that we could look for buys in there again. But according to the general rule is that you want to use the fair value gap, imbalance, order block, breaker block, whatever POI you have. You want to make sure that that POI is in your discount level, because your discount level is where we have high probable setup. So as you can see, we have used this 1 weekly BTC in the past to push higher, and now you can see that we have this also 1 weekly BTC inside of our discount level. So this is a more probable trade right here than it is up here, because as you can see, we just tapped it and then we took out this previous weekly high, as well as the body of the body of this candle right here. To get liquidity right there, created this relatively equal high. So this will be a target for long term. So I'm thinking price will do this and then go that, like do that. So that's that's what I'm anticipating in that is coming in the next week or weeks coming. So for now we are targeting this low right here, these relatively equal lows. So I'll just do this. So these are relatively equal lows that we're looking at taking this week, because at this week coming. But this broker is a broker that where the market is still open on the weekly, open on the weekends. So as you can see, our next thing is for price to pull down here and then push up here, or even we've got also this order block down here. So what I like to do is I don't necessarily mark out the order block using the wick. If the wick is too long, then I definitely use the body. But if the wick is like short and the body is really large, then I will use the whole candle. But as you can see, the body, the body, as you can see, the wick is bigger than the body of the candle. So I'm using the body of the candle because that's where price close. So this is my 1 weekly order block. So the next thing that you are going to look for when it comes to marking out these high time frame POIs is that you are going to see a retracement on a lower time frame like this. So on a lower time frame, you will definitely have bearish price action, and this is how I always get into the market, until like price pulls in here, and then you wait for that. What you need to wait for is for price to, you can get in. I'm not saying you can't get in on these trades, but once you see we are bearish, then that means that supply is in control. So this means supply is in control. This means supply is in control. This means supply is in control. So what price will normally do is it will retest these areas of supplies, because supply is in control. That means we will be taking trades from every pullback that we see based on a lower time frame structure. So I'm not saying you can wait until price pulls down here. No, if you can get in on the bearish movement that price creates by showing you that because I normally wait for a 1, 2, 3. So once I see price take out the previous low, creating a new low, then I'm most likely going to get into these bearish movements. So we are waiting for price to retrace, but in the time that you're waiting for price to retrace, you can definitely get into lower time frame trades. You don't have to swing trade any of these if you don't want to. But as you can see, we can definitely push lower from this. So another thing that I've learned is that once price has swept an area of noticeable liquidity, it will then target an imbalance to where price can imbalance from. So as you can see, the reason why I marked out really there's relative equal lows is because this is a magnet for price to go to. So as you can see, we are kind of consolidating on the daily time frame, but you can make use of this consolidation. So what I normally do is, when I see consolidating, I normally look for like order blocks, or I look for fair value gaps. So as you can see, I've got a balanced price range. So a balanced price range is just a area where two fair value gaps overlap each other, which makes it one of the most strongest and most powerful entries of all time. So this is my daily SIBI, and this is coupled and overlapped by my daily inverse. So this was supposed to be a BTC to push price higher, but as you can see that we violated that BTC and created a SIBI, which is also an inverse for value gap. So that's my one daily inverse for value gap. And as you can see, this is called a balanced price action, where a fair value gap is where a fair value gap is overlapped by a normal fair value gap. So as you can see, that is what we have. And inside of here, we will be looking for an entry. So inside of this blue, we will be looking for an entry. So I just want to go higher just to make sure that we didn't miss anything. And also, I also want you to pay attention. I forgot to tell you that we also created a valid order block on the weekly time frame up here. A valid order block or institutional candle is made out of is at swing high. First of all, it's at swing high, and it is also engulfed by a bearish candle. As you can see, we are engulfed by a bearish candle, and we have respected this bearish weekly order block by closing not even inside of it but below it. So we have pushed up, and we have definitely respected that by creating all these weeks, and now we are pushing towards, we took this low right here, so now we're looking to take this low right here. So that's my target. So my target for today is these equal lows. I'm not even going to mark them out, these relatively equal lows. That's my target because we've just swept this. So once we have swept liquidity, we are looking to rebalance into a fair value gap. So we're looking on a lower time frame. So I just wanted to make sure that you know that. So we are looking to rebalance into a fair value gap. So let me just mark this out as a daily weekly order block. So that's my weekly order block. So now since we were on the daily, we are going on a lower time frame to the 4 hour, because on daily I was looking for a lower time frame change of character up here. So what I'm actually waiting for is for price to take this low right here as well. But for now, I'm not actually going to wait until price takes this low. I'm going to actually target to look on a lower time frame to take price towards this low. So that's what I'm looking at. So since we have daily confirmation that we are bearish, the reason why we are bearish is because we have violated this daily BTC by creating a daily SIBI, and also not only that is we created also a balanced price range, which is these two POIs overlapping one another. So once we have that, we can now look at pushing lower, because first thing is we violated this buy side imbalance, sell side inefficiency, where only bias is found. We violated that by displacing fluid, creating a SIBI, which is sell side imbalance, buy side inefficiency. Also only sellers are found in here. That is why when we pushed up, we respected it, and now we are pushing towards lower. So next thing we will do is go to the 4 hour and see what price has been doing inside of here. Sorry, it's 4 hour time frame. There we go. And as you can see on the 4 hour time frame, we have created one of my favorite entries. Like, if you don't know it, then you don't know it, but you can go around and find out on my channel. So my favorite entry on any time frame on any pair is AMD. So one of my favorite entries on any time frame in any pair is AMD. So what is AMD? AMD is accumulation, manipulation, and distribution. So what price does is, especially in a selling situation, is that we will pull into a higher time from POI. So our higher time from POI in this case would be our weekly order block, coupled with our balanced price range. So as you can see, price consolidated right here. So I'm just going to mark out the consolidation phase. So this is where we consolidated or accumulated. This is where we accumulated. So let me just make this bigger so you can see. This is where we accumulated. So before I did that, that's where we were looking for an entry for. So we have accumulated. I'm sorry, I'm just trying to make this. So we have accumulation followed by manipulation. So this is the power of 3, guys. Followed by manipulation. This is manipulation, guys. So time is fractal. So all of what you're seeing right now on my chart, me analyzing, happens on every time frame. I'm not even lying to you guys. This happens on every time frame because time is fractal. It's just a matter of fact of that time interval. So it's just the matter of fact of how long it takes to print these candles. So let's continue with this video. So this is manipulation and this is distribution. So as you can see, price is distributing. As you can see, we have distributed. So you could have had an entry inside of here, which I would have definitely gotten in. As you can see, you could have gotten in right like at 50% of this fair value gap, which is a 4-hour SIBI. You could target this low right here. That could have been a 1:2. So this will be my 4-hour SIBI right here. So you could have get into this distribution phase on the 4-hour, or you could have gotten into the next trade. So that's the next trade. As you can see, we've got accumulation right here, and yet again we have got it again right here. So as you can see, we have accumulation back to back, but what this is actually called is redistribution. So we have consolidated, which is essentially price accumulating, and when price accumulates, it generates and engineers liquidity both out of the market, which is sell side and buy side. So we took out buy side first. As you can see, we took out buy side, then sell side, and then it distributed inside of this phase right here. And now what price is doing, we are redistributing, but I also see price also consolidating, which is definitely accumulation. And then we have price again. Let me just fix this. Let me just fix this a little bit. There we go. We had price then manipulate. I just need to find out how. Okay, there we go. Then we had price manipulate once again. So this is how I get into the market most of my times. So as you can see that this is manipulation in the market once again. Right there, and as you can see, we are starting to then distribute inside of here to take us towards this weekly pussy right there. So that's how I'm gonna look at it. into this new trade. So that's my entry for the week coming, even this weekend, because we do have another play on AMD. So as you can see, so my entry will be inside of this balance price range. So you have an entry right here. So my entry is going to be inside of this balance price range. As you can see, again, we have this 4-hour survey, and that is combined with this 4-hour inverse. So let's just mark out. So this is where I'm gonna end inside of. So I'll have a couple of entries. I'll show you where. I'll show you exactly where my entries will be. So one will be on this order block up here to target this low right here, to target this previous low, and that is a 2:1 or 2.5:1. And then my next entry will be this this balance price range. I'll set an entry right there, and I will target my 1 weekly pursue right there. And also I'll have another target, which is at the start of this 4-hour survey. Put my stop loss just above it, and also targeting this survey right here. So that's for today. That's all I'm looking at. It's very, very simple. I'm not trying to fill your guys' heads with a lot of terminology and all of that, but this is how I get into most of my charts, getting most of my trades. So it's simple. I try to keep it simple. I try to look for the major liquidity areas, major POIs, especially from a high time frame perspective, you know. So I like to trade in the direction of high time frames, because high time frames trumps lower time frames. That's where I'll be looking to get in. So I will definitely see you on the next one. Let me just adjust that. There we go.